Hello and welcome to this daily market commentary for Wednesday, the 30th of October. The middle of the week is here, and what a day it is for data and news releases. Obviously, the FOMC meeting takes center stage as the market waits patiently to see if the Fed will cut interest rates, as well as offering guidance for any future moves. But before that, we had US ADP, non-farm employment data, as a precursor to Friday's government NFP data, which showed gains of plus 125,000 for the month of October, marginally better than expected. Shortly thereafter, we had provisional US GDP data released for Q3, and that came in at plus 1.9% against a market expectation of plus 1.6%. Next up, we had the Bank of Canada interest rate decision, a monetary policy report. They left interest rates unchanged, but they did cut the growth forecasts for 2020 and 2021, which saw a pretty sharp spike higher in dollar CAD from 130.85 up to 131.85 initially. So after the early data releases, the markets descended into a bit of a slumber to await the Fed. We had euro sitting at 111.20, dollar yen 108.90, and cable at 128.75. Gold would sit at 14.93, and US equity markets were all but unchanged. So what did they do and what did they say? Well, as expected, they cut interest rates by 0.25%. The wording of the statement changed a little, which the market initially interpreted as the Fed is taking a pause in cutting rates and will evaluate all incoming data. Initially, the markets are fairly much unmoved. Equities turned slightly positive, and the dollar is a spread or two higher. But as usual, it's not necessarily about what they do; it's about what they say, and that really comes from the voice of the Federal Reserve Chairman Powell. And he notes that risks to the economy have lessened, highlighting positive developments on trade and Brexit. He also reiterates that if need be, the Fed is well positioned to act and cut rates further if it becomes necessary to do so. He also highlighted a strong job market and strong consumer spending. The net result for this is for the dollar to rally. Dollar yen rallies up as high as 109.28, and euro drops down to 110.85. Gold falls down to 14.82 an ounce. Equities, though, remain broadly unchanged. He also suggested that only an increase in inflation would see future rate hikes, thus implying that the normalization of rates could be over with. The market really latched onto that comment, and the dollar move higher is short-lived and quickly reversed. Euro comes streaming higher up to 111.50, and dollar yen drops all the way back down to 108.75, and gold bounces back up to 14.95. A complete reversal of the initial move and then some. Equities decide that they like what they hear as the Dow Jones rises by over 100 points. By the end of the day, the dollar is marginally off its lows, and equities close near the highs, the Dow up 115 points and the S&P making another record close. But the fun is not over, because we have earnings reports from some major companies after the bell, once the stock markets are closed, from both from Facebook, from Apple and Starbucks, and all three initially appear to come in strong, so potentially a boost to stocks for Thursday. Turning to a little technical piece here, kind of look at euro dollar today. A volatile afternoon, as you would expect, and the market perception that a rate hike in the US is only going to come around with a spike in inflation has seen the dollar suffer late in the day, and it's taking euro dollar from 110.80 up to 111.50. As you can see here, we've got this that tail there is move that tail there is the post Fed sell-off, and then the reversal. You can see very sharply up to 111.50. As you can see from this chart here, we've got some pretty good support now building just ahead of 110.70, and we have this resistance here, 111.80. Should we break that, then we come on to some stronger resistance at 112.50. Keep an eye on these levels over the coming days, especially with US non-farm payroll data out on Friday. as we could obviously see a break in either direction. And with that, I hope you all had a successful trading day. It was a volatile one for sure, which we kind of knew it would be. And we move on to tomorrow, the last day of the month. Speak to you soon. Cheers.